In the early hours of May 6th, the market felt normal, almost too normal. The sun had barely risen over New York. Trading floors were quiet. Screens glowed softly in the dim morning light. Everything had a calm, predictable rhythm, the kind of rhythm that makes traders feel safe, maybe a little too safe. Stocks moved in slow, steady patterns. Nothing dramatic, nothing alarming, just the gentle heartbeat of an ordinary day. Traders sipped their coffee, leaning back in their chairs, chatting about weekend plans, checking overnight numbers without urgency. And behind them, in the background, the machines hummed. A soft, electrical sound, like a hive waking up. Not loud, not aggressive, just present. But beneath the surface, something was building. Something invisible, something incredibly fast, and incredibly dangerous. The world didn't know it yet, but it was standing just seconds away from one of the strangest and most terrifying financial events in modern history, a moment when humans would lose control and machines would take over. A storm was coming, a storm made of code, a storm made of speed, a storm no one could see, not yet. High-frequency trading, HFT, the invisible army of Wall Street. Machines that could buy and sell faster than any human could even blink. Programs built to watch every tick, every movement, every hesitation in the market. They were designed to be perfect, flawless, cold, emotionless. On this particular day, one algorithm, a large institutional selling algorithm, was programmed with a simple rule. Sell quickly, sell aggressively. Don't slow down, don't stop, no matter the price. And when that algorithm woke up, it began to do exactly what it was designed for. Sell. Over and over, without emotion, without logic, without understanding the chaos it was unleashing. Other algorithms saw the selling activity. They detected stress, movement, opportunity, and like a chain reaction, they joined in. One machine triggered another, then thousands, then millions. Trading volume exploded, not because humans were panicking, but because machines were talking to each other at blistering speeds. To the human eye, the market still looked stable, still calm, still normal. But deep below the surface, the foundation of the market was cracking, tilting, shifting, and nobody noticed, not yet. At exactly 2:45 p.m., the market snapped. There was no warning, no slow decline, no time to think, only speed. The market didn't fall gradually. It fell violently, like a trap door had opened beneath it. Prices of major companies worth billions, collapsed to a single cent. Yes, 1 cent. Other stocks shot up to $100,000, prices that made no sense, numbers that should have been impossible. Traders froze. Phones rang out of control. Screens flashed red and then black. Floor brokers shouted at each other over a roar they couldn't understand. Liquidity, the bloodlight of the market, vanished instantly, as if the entire financial system took a deep breath and forgot how to breathe out. Billions of dollars evaporated in the blink of an eye. People watched their screens in absolute disbelief as years of savings disappeared, as algorithmic chaos swallowed the market whole. And then, Just as suddenly, the market bounced back. Prices returned. Liquidity returned. The chaos faded. The storm passed. 5 minutes. 5 minutes that felt like a lifetime. 5 minutes that changed everything. When the smoke cleared, the world demanded answers. What caused it? A glitch? A typo? A massive cyber attack? Regulators dug through mountains of data, terabytes of order flow, millions of trades, billions of messages between machines. And then they found him. Navinder Singh Sarao, a lone trader in a small, quiet house on the outskirts of London. Not a Wall Street billionaire, not a corporation, not an army of hackers. Just one man, with a home computer and a custom trading setup born from obsession, talent, and a deep distrust of the markets. His actions weren't malicious. He didn't intend to break the system. He was simply trying to trade. But the system was fragile, and his strategy, combined with HFT behavior, created a perfect storm. He became known as the Hound of Hounslow, a nickname neither he asked for nor wanted. Yet there he was, the single figure blamed for shaking the foundation of the U.S. financial system. Today, the markets are faster than ever, algorithms stronger, code more complex, risk higher. Human traders now compete with machines that don't sleep, don't fear, don't hesitate. And the flash crash stands as a warning, a reminder that the system we trust is far more delicate than we want to believe. A reminder that even in a world ruled by machines, a single action, a single flaw, a single line of code can change everything. 5 minutes. That's all it took to show the world how thin the line really is between order and chaos.